This is Mastering Your Wealth with David Gagnon, the podcast.
Now, you might start out working with a financial advisor, but then you decide at some point that you need to make a change. Well, among the most common reasons why you need to make this change are these right here. Your current advisor is retiring. Your current advisor fees are too high. Your portfolio performance isn't as strong as you would like, and you want a comprehensive guidance approach that covers more areas. So the thought of changing advisors can be intimidating. I mean, my gosh, just deciding on one person is enough. Now you're talking about I got to change everything. So if someone's thinking about choosing you, David, do you do all the heavy lifting when it comes to making this transition?
Yeah, well, first we want to evaluate if what they're currently doing is the right fit to meet their needs long term. And when it comes down to fees, you'll find that there's all kinds of fees that might be assessed against your money aside from even advisory fees. There could be fund charges and transaction fees. And the thing that's important to understand is, first, you should be aware of the fees you're paying for whatever help you're getting and how you're being invested. But you really want to quantify whether you're paying fees and those offsetting solutions for paying those fees and the benefits that might be created by a good advisor are well worth paying the fee. So, for instance, if you have a tax strategy that we're implementing, that we see that if you kept doing what you're doing without making any changes, you might pay $500,000 more in taxes than what we see we could mitigate or eliminate with a good tax strategy, yet you pay us a fee that might be a little bit higher than your current advisor, and the net result in your lifetime, you end up with a lot more money because of a good tax strategy, then it's well worth paying the fee. And so if you are paying a fee and you're getting better solutions and better results, then it's worth it. And I always convey this to folks when they're sitting down with us, and I'll explain and go over in detail what the benefits are that they're creating if they're going to make different decisions and we're implementing different strategies and using different tools, yet their cost might be a little bit higher than what they're paying now. They're okay with that because they understand there's value there in paying a little bit more of a fee. In some cases, we're reducing costs and creating more value. So that's an easy decision, right?
Mm-hmm. Yeah, absolutely.
But it comes down to having a plan, a comprehensive guidance approach in a lot of areas that impact your money. We get calls from people all the time because people are working with product salespeople and they see that they're not getting the answers they need in how to optimize their Social Security and what strategies work best for them, or how to optimize their pension, or how to have a backup strategy to have in place if you need out-of-pocket health care so you don't derail your retirement by huge expenses that could apply to long-term care or home health care expenses. And people are looking for help with estate planning. We're not attorneys, but once we coordinate your financial plan, which is your life plan, and implement that, now we can give some guidance on how they should have an estate plan that's properly designed right next to it. And so having comprehensive planning guidance and optimizing all these areas of financial decisions so you get the most out of your resources is very critical.
Absolutely. And I thought something interesting you just said there I want you to expand on there is that your financial plan is your life plan. What do you mean by that?
Well, these are the living benefits that you need to create so you can enjoy the retirement you dreamed of and get through it for as long as you think you're going to live comfortably and with predictability. And you can only do this with a sound plan design that's really tailored to your specific goals and objectives. And we don't see people that reach out to us that have any type of plan. They have investments, they have tools. And what we find out quite frequently is when we do their comprehensive forecast analysis, their investments aren't in line with what their financial solutions and benefits are needed to make it all work. So if somebody's in retirement and their main objective is they need income generated from their nest egg, but they're still in a growth investment plan, there's a lot of risk there if you're relying on a growth plan that you have to sell off your stocks or share prices to create that income. It works okay if the market's going up, but if the market starts seeing some losses and you still need that paycheck every month out of that investment plan, that is a fast track to derailing your retirement because you are exposed to what's called sequence of returns risk. And that just means you're experiencing bad results in your investment plan at a time of income that's being dispersed from that portfolio. So we get into this when we meet with people and we put their planning designs together, and we talk about all these different risks we're trying to mitigate and what are the solutions and strategies that we can employ so they don't have to become a victim like most people are because they're not running their retirement with a plan.
Exactly. And I mean, if you're sitting back going, well, wait a minute, I never thought about this. I thought putting together a financial plan just meant that, well, I can pay the bills, I can pay the mortgage, and hopefully there's enough around if there's an emergency. Well, again, your financial plan is your life plan in general, but certainly when you enter retirement, right? I mean, it's essentially that lifeboat that you need to keep on moving. And the question everybody has is, how do I make sure I don't run out of money? How can you give me that guaranteed income that I've been hearing about, that paycheck every 2 weeks that I've been used to getting in retirement? Well, the good news is there are different tools and vehicles that David could literally sit down with you one-on-one and show you. And I don't want to get too specific because everybody's situation is different. That's why we always say, look, come in, let's answer these questions you have. Let's take a look at the current plan you have, or if you don't have a plan, let's start from scratch. And David, again, is going to put his over 3 decades of experience to work for you. Again, this all begins with putting together your life plan, which is also your financial plan. How do you get started? You come in for this complimentary forecast analysis. That phone number, 203-872-0009, 203-872-0009. More details, of course, on the website at masteringyourwealthradio.com. I touched on it just a few moments ago. A lot of folks wondering, okay, well, should I work another 1, 2, 3, 5 years just to kind of give myself more padding? Because look, we've kind of been through it all in the past 3 to 5 years here from COVID. Now we got this election, we got inflation, the market, etc. Well, a new survey shows that Americans don't expect to work beyond their early 60s. That shocks me. They're looking at giving up their full-time paycheck at age 62. Yahoo Finance Carrie Hannon says that this is actually a terrible idea.
Unless you absolutely can't continue working because of a physical issue or you can't get a job because of ageism. And that's very real. But, it's a bad idea because in a sense that they have medical bills. If you leave at 62, you still have to foot your medical bills until 65 when Medicare kicks in. And even then, Medicare doesn't cover a lot of things. People are mistaken there. So I think people don't factor in some of these things like inflation and then, of course, longevity. We are living longer lives.
And she is right about that. We are living longer, which means what? You need more money. So when someone comes to you and says the only thing holding them back from retiring early, like at age 62 here, is health care coverage, what's your advice here?
Well, I'll tell you, before you really give your notice and leave your occupation, it's good to make sure it's all going to work out financially. And like she mentioned, there are things that a lot of people don't think about, try to figure out if their financial situation will last as long as they might live and how they save their money, how much they have, how much they're going to spend, and take into account different variables which we have very little control over, whether it's inflation, where we do have some control there because we all can kind of manage our own independent inflation spending habits a little differently because you and I buy things differently, right? Mm-hmm. And so some things you buy might have an higher inflation factor than some things I might buy, especially when it comes to food. If you're buying organic and I'm going to get the special of the day, my inflation factor for my food bill is probably going to be lower. But the thing is, it's always good to get a second opinion before you get in a situation where you find that you retired and a few years down the road you see that things are not going to work, and now you're in a really bad situation where it's hard to find employment at that age that was paying what you might have been earning, giving you the benefits you were getting. And we've done a number of forecast analysis this year with folks that were on the fence about wanting to retire, but they did call us. And it's a good thing they did in a number of these situations. They were not going to be able to make their money last as long as they had hoped to, because in a number of situations, one of the two spouses was expected to live well into their 90s, and that wasn't going to work out too well. And so just by working 2 to 3 more years in a number of these situations fixed the problem. And it makes a big difference when you think about it. If you're going to retire in your mind at age 63, But we find that, well, if you work to 66, your problems are solved because you're not spending down any savings for 3 years. You're actually adding to it if you're going to continue to work. And you have less of a life expectancy at that point to need as much money to carry you out through your lifetime in retirement. And going through this exercise is an individualized case. Everybody's situation is different. And you don't want to get halfway into your retirement years to realize you're not going to be able to make it without needing to sell your home or take out a reverse mortgage or make some drastic spending cuts. And now the lifestyle that you'd hope to live in retirement is just not achievable.
You know, I recently saw this in an advice column where a man in his 70s, wrote that his goal is to become a millionaire before he, quote, leaves this world. He has $768,000, but really wants that $1 million. And of course, he asked the question, how do I achieve that? My first question is why, right? You seem to be doing okay. You're in your 70s. Why do you need to reach this milestone? But it makes me wonder, do you see people wanting to take unnecessary risk in retirement to potentially reach some goal?
One case comes to mind. A number of years ago, I had a gentleman come through one of our retirement planning workshops, and we were doing a forecast analysis, and he gave me all his documents, and I was looking at his tax return. And it showed that he had a carryover loss of just about $1 million. Now, he was a single man, retired pharmacist, and I looked at the rest of his accounts, and he only had about $100,000 to $200,000 in his retirement accounts, and he was in retirement. And I said, where did this loss come from? He says, well, I made a stupid investment decision, and I invested a brokerage account into a gold investment, and he lost 90% of it in a very short period of time. And so
Yikes.
I said, why did you do that? He goes, well, I wanted to get my investment value up to a certain amount, and I was following this stock picking or gold commodities service that he was subscribing to, and he thought it was a sure bet, and he got decimated. And now he was going to run out of money. And his backup plan was to take an equity loan out on his house, which he had quite a bit of equity, but he was going to live off the equity of his home. And so, you don't want to find yourself making these types of decisions and being in this situation, especially when you don't have a paycheck and you're no longer working. And had I met him before he made this decision, I would have helped him get through all this, because the emotions kind of took over this situation, and it happens quite often. People make emotional financial decisions, and most of the time it doesn't work out very well. We want to get people into a planning process where we look at the details of what your objectives and goals are in your current finances to see, are they in alignment, and what do you need to do to make improvements to make it all work financially? And then from the details of your data, now we can look at how do you make rational, logical decisions in how you invest your money, how do you put together a tax plan by using the tax code to your advantage, and how do you make other financial decisions that work for you and not against you, whether it's buying a home or a car or paying off debt or managing your cash flow or paying your taxes. There are all kinds of areas where we're always looking for the inefficiencies or the things that are in your blind spot that are costing you money. And having that second opinion from anybody, whether it's me or somebody that does comprehensive planning that has been doing this for a long time, we feed off of years of experience to provide value and benefits to those that need it and need to see it and learn about it and implement it. Because when you feel ill, right, you go to a doctor.
Sure, right? Absolutely.
You know something's not right, or you just want to get a second opinion to make sure you're okay. Well, a good doctor is going to hopefully spend some time, ask a lot of questions, try to diagnose whether there is a problem, and if there is, prescribe a remedy, whether it's some type of lifestyle change or eating change or maybe medications or maybe you need an operation. I don't know, but you're going to that person because they have an expertise in their field of health. And same thing with finances. It's much more complicated than people really understand. It's not just saving and hoping it's all going to work out when you get to the day you want to retire. You hope that you have enough money. You hope you're not going to lose money. You hope it's going to last as long as you do. You hope you don't pay more than your fair share of taxes. You hope healthcare doesn't derail your retirement. I mean, there's so many things that you're hoping that
lots of hope,
don't work against you, right? And so with a good plan, a strategic plan, we can mitigate a lot of different areas of potential risk. It just comes down to getting a little bit more professional help. And we give people a very easy in to at least put their toe in the water with us to let us do the comprehensive forecast analysis, because they'll get a lot of value out of that. They'll see whether it's going to work or not. And now we're in a better position to identify how we can help you in a better way.
Well, let's break down this comprehensive forecast analysis. Okay, so we're going to forecast a couple things. We're going to look ahead both, 10, 20, 30 years. Then the comprehensive part is going from A all the way to Z. So let's talk about this first time meeting, Dave. Do I need to bring in all my statements? If I already have a current plan, do I bring that in? Is this simply a get to know you, handshake, how you doing meeting? Tell me about that first meeting.
Well, the first meeting is going to be a phone call, introductory call, or they can come to the office. I really want to get to some area of understanding as to what you're concerned about, what you've been doing in the past, what have you liked that you've done in the past, what don't you like, what would you like to accomplish in the future. And then I get a kind of a benchmark of where their mind is and what they've done in the past. But then the next step is to do the comprehensive compilation of your forecast with what you're presently doing. And the way that starts is my paraplanner, Frank Benini, will email those folks the instructions how to get into our planning portal. And there, it's all encrypted. You can provide all the information we're going to need and attach your documents into a vault that's encrypted. And you can do it at your own pace. And everything's saved. We'll see on our end how far you've come along. And once you're completed with your homework exercise, then we're going to complete that initial plan review going forward, just to see if what you're presently saving and what you're earning on your investments and what you would like to spend and what you're going to pay in taxes and using different inflation factors, are you going to run into a problem? And when we do this, now we can see some inefficiencies, some problems, and now we can have the meaningful discussion as to how we can better employ either financial strategies or financial tools to lower their risk. And it's not just market risk, it's inflation risk, it's tax risk, it's interest rate risk, healthcare risk, longevity risk, sequence of returns risk. All right, there's so many types of risk.
So many things, yeah.
And so when we have these meetings and these discussions, which are complementary, the people that go through this exercise are starting to get better clarity as to how things are going to happen or work out if they do nothing. And then they get better clarity and an education as to how we make those improvements, how we create the benefits and the solutions that their plan identifies to us that you're going to need and require to make that all work out for as long as you think you're going to live. And so it's a methodical approach. It's a holistic approach. I mean, and it's a process. The last thing I would ever discuss with anybody is, what do you do with your investments? You might have some investments that are appropriately positioned for some of your planning needs. But if there are opportunities that we can create to lower your risk, give you better yields, be more tax efficient, we're going to start putting together a plan solution for that and quantify the comparison. If you do nothing, this is the way it's going to look. If you implement a strategic plan that's personalized, these are the advantages you create on your behalf, whether it's increasing your income or having an income you'll never have to worry about outliving, or creating more wealth that will pass on to the next generation very tax efficiently and take a lot less risk along the way. And so it's something that people appreciate, because they say we do put a lot of time into this on the front end.
Sure.
But it's important that we do this so we can see that we can create value and provide opportunities to really put you in a better financial position for your retirement.
For more details or to sit down with David for your complimentary financial GPS, visit masteringyourwealthradio.com. David Gagnon is an investment advisor representative of Retirement Wealth Advisors, LLC, an SEC-registered investment advisor. First Financial Planners, Retirement Wealth Advisors, and WICC are not affiliated. Exposure to ideas and financial vehicles discussed should not be considered financial advice or a recommendation to buy or sell any financial vehicle. Individuals should consult with a professional specializing in the fields of tax, legal, accounting, or investments regarding the applicability of this information for their situation. Past performance is not a guarantee of future result. Investments will fluctuate and when redeemed may be worth more or less than when originally invested.